Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight it was very choppy after a couple of news events turned some of the markets slightly into a whipsaw price manner. Firstly is that the news of growing concerns over China's second largest builder and land developer, Evergrande Group, could default on billions of dollars of debt, a scenario that would have a ripple effect across the economy. Evergrande Group is the most debt-laden property developer globally, with liabilities in excess of $300 billion. Apart from that, all eyes turn to the US Federal Open Market Committee when they begin their two-day policy meeting, and then on Wednesday or Thursday 4 a.m. Sydney time, all eyes turn to the US Fed Chairman Jerome Powell, as a post-meeting news conference will be especially concerning inflation, economic growth, interest rates, and when the Fed will likely start reducing its purchases of government bonds. So with the recent risk of choppiness, the market has found a little bit of interest as the dollar pulls back slightly. Nevertheless, the downside target for the Australian dollar is round about that 72.25 to 35. Now, I believe the market may have found a short-term base there, but however, there is still risk of a further down test. Now, with that being said, look at this candle, a hammer to a bearish case. Now, from that, the market may attempt to try and push through the top side resistance around 72.80. For some of you that don't know, that a posted bearish hammer, although not the strongest of positive signals, specifically indicates that the bears or supply entered the market, pushing the market down first of all, which he reached around that 72.18 support. But where later the markets found that the bears were outnumbered, otherwise down demand increased, which drove the Aussie back up. More importantly, though, if we see a close above 72.80, that could reinstate a short-term rise up to 73.30 to 40. However, a lot of work needs to be done to that top side and to support that weak bullish hammer. And if it does fail, then we could see the market take out the level of 72.25 and look down towards 71.70, with a base still holding roughly around that 71.35. So with the euro, if we can see here, the market has also staged a slight positive candle, well, not to the strength of that though, being a slight bear candle as that, but close to a doji, and therefore the dragonfly doji may try and attempt to push higher. However, there's a lot of work to do on the top side, and with the resistance holding around 117.55 and a cap of 118.15, and if the dollar, which measures the greenback strength against a basket of 6 major currencies, rebounds from this level, currently it's 93.20, would actually see a revert in prices and look back towards the bottom side of the range, which is around 116.75 or down to 116.15, somewhere beneath this level here. We'll have to go to the weeklies and look further to the downside where I've outlined here to 116.15. However, do keep an eye on some of the news events besides the US Federal Open Market Committee, or FOMC, in case there are maybe other aspects that linger, especially with the story about that I mentioned earlier, to the company in China, the Evergrande Group. The dollar yen story, well, the market seems to have rushed back to a little bit of a safe haven as yen strength came through overnight. Still, the market is showing a little bit of divergence. Overall, though, I still feel the market is finding good resistance around that 110 level, and any challenges towards that top side should continue to fail, and therefore look back towards that bottom side around 109.25 with a base still holding around 108.70. The pound took another drop in price overnight and reaches his objective at 136.35.45. Nevertheless, the technicals are still negative and the ADX is still trading to a bear case. Although attempts may see a rise up to around that 137.10 resistance, I still feel the market is poised for a test down, and with the risk event into this week of the Bank of England when it announces its policy rate, but unlikely to see any change there, but may indicate whether inflation is still transitory. With the price action with the two legs, saw a very sharp downturn for sterling yen, crushing through the levels of 150 and now reaching its next support level, that is around 149.15.45, holding there a key level, that is. I did mention it yesterday that around this region, as before, this long-legged this long tail, should I say, dragonfly, and also there is certain aspects when it comes to the support area there. Let's see if we see a small bounce that could give opportunity to short the market and then turn lower. Finishing off with gold, the market is attempting to recover from that 1,748 level. I do feel that we could see further risk to the upside if we see a break of 1,766 to 68, but I feel until we get that break, then all eyes remain on the support, especially if the dollar does strengthen back again. Technicals are bearish, and also with the ADX trending, should see a return into the bear case. Finish up with oil. The market has put the brakes on this slide. Nevertheless, there's a little bit of a bearish pattern still coming through here, so I still feel the market may test lower. However, we need to see a close under 70.45, which is only about 50 points away, to reinstate the downside to 67.40.80. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.